Welcome back, folks, to the channel. It's been a while since my last video, but I thought of an idea the other night, so I thought I'd share it with you. And this video is going to look at lease purchases versus personal loans. We haven't really talked much about lease purchase. Lease purchase is similar to a PCP, but they can sometimes give you slightly lower monthly payments because the interest rate might be slightly less, but also the main difference with a lease purchase is that the balloon payment isn't a guaranteed final value. So even if your car is worth £5 at the end of the agreement, with a PCP you can just hand the car back subject to fair wear and tear and mileage, etc., and walk away. With a lease purchase you can't do that, so you've still got, if say you're offsetting £6,000 to the end of the agreement and your car's worth a tenner, you've still got to pay that £6,000. But because they're not guaranteeing that value, sometimes it might be a little bit higher because there's less risk for the lender. Now, if the balloon payment, the final value, whatever you want to call it, is higher, obviously your monthly payments will reduce a little bit. So there are advantages, but what I want to talk about today is just go through a very basic example highlighting the differences really between doing a lease purchase and also a personal loan over perhaps a longer term and the savings that you can make. You've got to remember that a personal loan, as we've talked about in the past, isn't it's not fixed on the car, so it's an unsecured debt, so it's not so good from a protection point of view, things like voluntary termination rights and that kind of thing. But as you've seen in the past and as you'll see today, if you can get a really good rate on a personal loan, you'll save a fortune. Now, what I'm going to do on this example is assume that you bought the car on a lease purchase, but you come to the end of the agreement and you want to own the car. Now, interestingly, look, I was just looking at, I did a search for lease purchase deals and I came across buyacar.co.uk. And when they explain what a lease purchase is, where was it? Here we are. If you look on here, it talks about what a lease purchase is. It's generally a cheaper option than hire purchase. It can be more flexible than PCP, as the monthly instalments and final payment can be widely adjusted. But the thing down here, it says, look, at the end of the agreement, you have the third type of payment to make, the final instalment, which is often called the balloon payment. This is usually several £1,000s and has to be paid. You can't just hand the car back. But the interesting thing is they're obviously acknowledging that some people may want to pay the car off, own the car at the end. So it says here, look, however, there's usually the option of extending the lease agreement by making additional monthly payments or refinancing the vehicle to cover the balloon payment. Now, the problem with that is, obviously, you've taken out a lease purchase agreement. Let's say you've done it over 48 months and let's say you've got £6,000 at the end, and then you come to the end and you want to own the car, but you haven't got that lump sum, so you have to refinance. The problem with that is you're paying interest twice because you've paid interest within the first agreement, which incorporates that final balloon payment, so you've paid interest on it. And then you get to the end and you refinance that balloon payment so that you can own the car, and you pay interest again. So what I want to talk about today is taking out a personal loan perhaps over a longer period, but because at the end of the personal loan you'll own that car outright anyway, you haven't got two lots of interest to pay, if you see what I mean. You just carry on paying it. So let's just have a look at an example. So here, look, I've got a Volkswagen Caddy Maxi Combo van, okay, just because it had a lease purchase example with it. And at the bottom, look, it says lease purchase, loan amount 21,288. So there is a deposit to pay, but we'll assume there's no deposit and we'll just base the examples on this loan amount. 21,288, deposit amount 5323, as it says there. Representative of 9.9, 48 months, monthly payments of 436, and an optional final payment of 6153. So ignore the deposit. We're basically borrowing 21,288 over 48 months at 9.9 APR, and there's a balloon payment of 6153. So let's put that into the old spreadsheet. I'm still getting inquiries about the spreadsheet, so I'll put a link up to the spreadsheet here. Email me if you'd like a copy. So what I've got here, look, is the spreadsheet, and I've put in the loan amount of 21,288. Guaranteed future value, it's not a guaranteed future value, it's a balloon payment in this case of 6,153. APR of 9.9 and 48-month terms coming out on the spreadsheet at 43390. They've got 436, so there's probably a bit of rounding going on in the APR calculation. But it gives us a good starting point for comparison. So let's say we pay this off and we come to month 48 and we've got to find 6153, okay, which is there. So then what we need to do is finance that again. Now, I don't know what interest rates you'd get, but let's assume that we get 9.9 again. So what we'll do is we'll base it on a term which gives us a pretty much the same monthly payment, so it just carries on. So what I've done on here is I've put the balloon payment into another spreadsheet, 6153, 9.9, and done it over 20 months. That gives us 334. Actually, we could do it over much less, couldn't we? Let's do it over, let's try and get the monthly payment the same. We're looking for 436. There we go. Let's do it over 15 months. Okay, so we've come to the end. We've come to month 48. We want to keep the van, so we're going to borrow that 6153 over 15 months, give us a very similar monthly payment. And the total we've now paid to own that van is obviously the sum of the two agreements. So let's have a look at this summary here. Let's just change this, 43779, and the total was 656688. Okay, so what I've done here, look, is I've taken the original agreement. The monthly payment was £436 for 48 months, which means we've paid 20,928. That's simply 48 times 436. And then we come to the end and we've got our balloon payment of 6153, and we've refinanced that over 15 months, as we've just seen here, which is 15 more payments of 43779, which gives us 656688, and we've added the two together. So that van, plus any deposit that we had to pay at the beginning, has cost £27,494.88. Okay, doing it that way. Let's now assume that we could get a Sainsbury's bank loan, Tesco bank loan. There's plenty of them at 2.9%. Now remember what I've said before, you might not get that rate. It's a preferential rate, it's a headline rate, you know, it's what they call a representative APR, and it only has to be given to 51% of applicants. So I'm just assuming that you've got a very good credit history and you can get that rate. So let's have a look. So we're going to borrow again 21,288, and we're going to get 2.9% APR, hopefully. And what I've done is, in the first example, I've set the monthly period so that the monthly payment is pretty much the same. So in this case, to get the same monthly payment, I've only had to take it over 4 more months, so 52 months instead of 48. And at the end of 52 months, I will own that van outright. The other interesting point is, let's have a look how much we would owe at month 48. So if we go down to the settlement table, at month 48, look, approximately, give or take, we would owe about 1,740. So because the interest is so much better, we've paid the same monthly payment, and we've adjusted the term on the personal loan to get the same monthly payment. But the benefit of that is that at month 48, instead of having to find 6153, we only actually owe 1741. And the other advantage is we don't have to worry about it. We've just got to automatically carry on paying 4 more payments and we own the van. We haven't got to refinance that £1,741 and pay more interest. Now, the other way of looking at it is to say, okay, I'm not going to set the monthly payment the same. what I'm going to do is set the balloon payment at month 48 to the same, and then you'll see that the monthly payment will drop drastically. So let's have a look at that. So what we're going to do, same amount, 21,288. What we're aiming for is a settlement figure at month 48 of approximately 6,153, because that's what the original lease purchase quote had. So let's tweak the period. I don't know what it needs to be. Let's try 36 months. That's not going to work, is it? Of course it's not. Let's try 66 months. What does 66 months give us? Oh, that was a good guess, look. So I've now changed it to 66 months on the personal loan. And at month 48, look, to settle that loan would be 6,173. So the other one was 6,153 on the lease purchase. So this is pretty close. So we've now got a very similar scenario in terms of what we're going to have to find at month 48. But look what our monthly payments dropped to. 349 from 436. So we're nearly £100 a month better off, and we're going to owe exactly the same amount on the personal loan as we would on the lease purchase. But again, remember, we've just signed up to an automatic 66-month loan at the beginning. We've only got one lot of interest to pay, so all we need to do is carry on paying our monthly payment, and then we own the van. We haven't got to go, okay, we're now at month 48, I've somehow got to get another loan or another HP agreement for that 6,153. So again, let's have a look how that compares doing it that way. So on a 66-month loan, look, 349.34 a month, which is there. So total amount payable, 66 months, £23,056.44. And that's taken us 66 months. This way, it would have taken us 48 plus 15, so 63 months. So admittedly, you'll own the car slightly earlier. However, look what it's cost. 27,494 versus 23,056. And if you do it the other way, which was on the 52-month agreement, keeping the monthly payments pretty much the same, we'd own it 4 months after the balloon payment rather than 15 if we to refinance. And the total amount payable there is only £22,679. So if you want to keep the monthly payment the same, because the interest rate is so much lower on the personal loan, remember at month 48 on the loan, we only owe 1,700 quid. So we've got a lot more equity in that vehicle as well, should we want to sell it. And it's actually ended up costing us £4,815 less. Now this is an extreme example, and I've done it just to make the example quite easy to understand, but you can see the benefit sometimes of looking at a balloon payment, a lease purchase payment plan, and seeing if there's a different way you could do it on a personal loan. As I've said, personal loans, you might not get the rate. It's an unsecured loan, so it's not secured on the vehicle, so you've got a lot of those rights taken away from you compared with something like a regulated HP or lease purchase agreement, etc., PCP. However, you can see that you can save an awful lot of money, and this is exactly the way that I've financed my Porsche 911. I did it on a 7-year loan, believe it or not, and you might think, God, 7 years. Yes, but it's only 2.9% APR, and I know that in 4 years' time, my balloon payment, if you like, is going to be thousands less than it would have been if I'd have gone down the PCP or the lease purchase route. So I know that in 4 years' time, I'm going to have more equity in that car compared to if I'd have gone down the lease purchase or the PCP route. One thing I should say is that if you're looking at older cars, higher value cars, chances are you'll be more likely to be offered a lease purchase agreement than a PCP. When I was looking, I couldn't get a PCP on certain 10-year, 12-year-old Porsches. They just didn't exist. You had to go down the balloon lease purchase option. So if you have to go down a lease purchase option, you may as well look at a personal loan option if it works out more favourably. I hope that makes sense. I'm sorry it's been a while since my last video. Please comment and subscribe. I'll see you next time. Thanks for watching.